Yo, what's going on YouTube? This is going to be the recording for Sunday night's class. I'm going to get started in a moment here. Alright, everyone can see my screen, right? Just want to make sure there's no technological difficulties. It does look like some people are in the education and review channel. I'm not sure why. Alright, I moved everyone over. Alright, it is 8 o'clock now, 8:01 to be exact. I'm gonna get started. There's I think there's 400 likes on the tweet, which I knew there wasn't gonna be that many people coming. Must hit the Twitter algorithm or something, I'm not really sure, but I know you guys, I know the general people who usually attend the Sunday night classes around 70, 80, so this is good for now. Alright, so in today's class, I'm going to be going over how to determine trend days and trend day entries, and there's a little bit of there's something very important to understand about trend days, if you guys did not watch my top-down analysis video, on YouTube, I'd recommend doing that, because this has kind of a big part to do with it, so I'll probably have to go into other topics when I'm done explaining this, and then you guys can ask your questions, etc. But the main focus of this right now is I'm just going to be going over, here's the best chance you're going to notice a trend day, and there's going to be a few examples I'm going to show you, which a couple did not turn out to be trend day, but I'll explain why, and then a couple did. So there's one condition, and if you haven't watched my conditions video, I really recommend watching that as well. It's just a very, very good video, and it's how I kind of determine my bias. So I definitely recommend watching that. So trend days are probably one of my best days or worst days. It all depends on if I get in the morning. So this is the important part. When you wake up in the morning, the first thing you really have to do is look to see if there's any SMTs, or if there's any important fair value get from overnight, and it's important to do this because whenever ICT says, get off the chart and then come back later and see if it's offering something else, the reason why it says it when you chop around is because if you can get off the chart at let's say 10 a.m., 11 a.m., right, you got the New York session, and let's say there's no higher time frame fair value gap, when you come back, the chances of us having now an hourly fair value gap formed, or a 4-hour fair value gap formed, now that's actually giving you something to work with, versus there's no fair value gap on formed during the morning session. So if I'm in the 5 minute, of course there's going to be a ton of fair value gaps. If I'm in the 1 minute, of course there's going to be a ton of fair value gaps in New York Open, but not always when you're on the 1 minute, not always is there going to be a higher time frame fair value gap, and having a higher time frame fair value gap, I think if you wait for those to form, they're gonna make your trading so much easier, because if you don't have a higher time frame fair value gap, that's really the one thing I look for. It's gonna be hard for you to know where the draw on liquidity is, and the reason I say this is because if I go to the 1 hour, for example, when we were in all this kind of chop right here, right here, right here, there's just a lot of consolidation and movement to all these fair value gaps, right? We just kind of ping-ponged, right, from this to this one, we bounce up this one, back to this one, we kind of ping-ponged. So what happened was we ping-ponged from fair value gap to fair value gap, but in between we just consolidated. It was just so choppy, right? And it's key to have a higher time frame fair value gap when you trade, because on the higher time frame, these are going to mean much more than if there was I'm trading the 1 minute, I see a million fair value gaps, right? the higher time frame, to have a fair value gap, is just, it's going to make your setups in the lower time that much easier. And I always talk about the conditions, right? If the conditions, right, in my video, so my condition for this fair value gap would be, okay, I'm not necessarily looking for short out this fair value gap, but when we're in it, if we do get a short setup from it, I will take it as long as this is bearish. I know the draw is down to the sell side, right? So that's like a condition I kind of explain in the video I made on Twitter, okay? And again, because of this higher time frame fair value gap, right? It can give you easier setups on the smaller time frame, because if you don't see us rejecting or bouncing off a higher time frame fair value gap, right? If you don't see that, well then how are you going to know where the draw on liquidity is from the lower time frame? Okay, the only way you're going to know is if you see like a million equal highs, a million equal lows, which I'm going to make a video on that, by the way, on my YouTube. Okay, that's the only way you're going to know. So again, the reason why ICT says sometimes don't trade is because there's usually no higher time frame fair value gap to work off of. Okay, like in this, we worked off this a million times, right? I don't really take a fair value gap twice, but you can see we kind of worked off a million times. And then once we get down here, there's no fair value gap to work with. So when you're in the smaller time frame here, how can you even be confident that this draws down? Okay, and this is why you have to have a higher time frame fair value gap to work with, because it makes things in the smaller time frame so much easier because you can read them much easier, right? So like this fair value gap is important because you're like, okay, as long as this holds, right? And I can even make this more precise and go like this. As long as this holds, I'm bearish, okay? But right here, like all this stuff, there's not really any solid fair value gap, so we're like, okay, the draw on liquidity is going to be here because we're rejecting or bouncing out this higher time frame fair value gap. There's no clean fair value gap here, and that's why ICT said don't trade, okay? He never said it directly, but if there's no higher time frame fair value gaps to work with, it's very, very hard to get entries. It's hard to know where the draw on liquidity is, okay? And even like on the daily here, right? This is very tough to figure out the draw on the daily because there's no fair value gap right here. Okay, obviously my prediction was when we came up here, I guessed this, okay, something like this, which it took ages to play out, and that's obviously why I don't swing trade, because even though I was right on this, right, and by the way, I do think we're going higher. I think we're going to hit this high, then I think we're going to hit this one, and then obviously this is my ultimate target. The reason why I don't swing trade is because obviously I got it right, but it just took so much longer than expected. Okay, and like right here, these fair value gaps are all on balance, right? This kind of looks like just, I'm trying to think of an analogy like ICT does. I'm not really good with analogies, but it's kind of like, I don't know, a fish swimming in the water, and there's an open sea of food, right? This to me looks like the open sea of food. The fish wants to go here, right? So like same thing. This just is so unbalanced. It looks very clean for smart money to load up in, and that's why I kind of predicted, okay, we're going to go down, smart money's going to load, and then we're going to go back up to the draw on liquidity, versus like it wouldn't really make sense just to go up here because it's just this is the consolidation phase, right? So that's kind of my prediction. So again, it's hard. What the point is of this, it's hard to work with the lower time frame if you don't have an obvious fair value come in the higher time frame. Okay, I always talk about you should be focusing on the higher time frame fair value gaps, right? And it's important to notice the reaction to them. So like this one on Friday, right? I saw we have a giant momentum candle through this, right? And I was like, okay, we have a giant momentum candle through this, and as soon as you see like a PD rate like this break, you just kind of know, okay, this was totally violated. What does that mean when a fair value gap, when a order block, when any of those are violated? Okay, that means your bias is probably wrong. That means you probably should reverse your bias. Okay, and here was an interesting spot because I know this was the fair value on the daily, right? So we bounced off a fair value on the daily, so I was never expecting this fair value gap right here. I was never expecting us to reject that anyways. It's kind of one of those situations where people might be confused because, you know, you're bouncing off a daily fair value gap and you're in between a bearish fair value gap. But again, because we already retraced the daily fair value gap, that's gonna trump the bearish fair value gap we come into, because if we're bouncing out the daily fair value gap, right, with a lot of momentum, as soon as you see like this candle, you know the draw should be higher. Okay, so like that's kind of a lesson for, okay, if it's 50-50, just do it the higher time frame you're doing. Ignore the, so in this case I'll just ignore the 4-hour one because I know we're bouncing out the daily fair value gap. Okay. Okay, so for trend days, right? The way you're going to determine it is a trend day is if conditions keep holding, okay? And I'm actually going to use a live example right now, okay? It's technically still a trend day right here from Friday, okay? This is still a trend day from Friday. Okay, why is this still a trend day? Well, we still have not broken the trend from Friday. We're still going up. So if this was Friday, like Friday afternoon, this is still a per se trend day, okay? And I don't really like that word. But that's what people call it, okay? But basically, okay, we're still on that trend day, okay? And the way you determine it's a trend day is, one, you need to check, again, you have to do your top-down analysis like I do. You have to check the daily chart, okay? So you have to realize what kind of candles are we getting off the daily chart, okay? And this is, I'm going to explain this in the way that I can understand it. Okay, imagine this daily chart. Imagine this daily chart was a 1 minute chart, okay? And imagine you saw this 1 minute chart kind of bounce off this. Let's say this is a 1 minute fair value gap, and you saw the 1 minute fair value gap. We blew through this bearish fair value gap, and this was a 1 minute candle, okay? Right, where would you guess the next candle is going to go to, okay? Just be honest, right? We see a ton of momentum going through this bearish fair value gap. You see us bounce off fair value gap. If you were to guess, where would you guess the next candle would go to? Type in chat. I know this is kind of you guys already know, but just answer me. Be honest. Like, be completely honest. Okay? And explain why, okay? I need to know you guys are the why. You need to understand the why. Why do you think the next candle should go up? Okay, tell me 2 good reasons. There's 2 good reasons here. Why should the next candle expand up and go for liquidity? Volume and balance and high, kind of. Okay, so Mr. Turner said broke through the SIBI, okay, which SIBI is just a bearish fair value gap. It just stands for buy side imbalance, sell side inefficiency. It's just a fancier name. Okay, so 1, we broke through the SIBI, which is really good answer. Again, I always say look for PD arrays that have been violated. Okay, this is a PD array that's been violated to the upside. So where should I expect us to continue? Probably up. Okay, so that's the first answer, right? We violate this bearish fair value gap, and we got displacement. That's another good reason. Okay, you can't. The problem was saying, oh, there's buy side liquidity above. Right, that's not really a good answer. Yes, that's okay. If you look right here, right, there's low resistance liquidity, kind of. Okay, we get a high right here, high right here, high right here, high right here. So whenever I do hit these, right, we're gonna slice through these because there's just stop after stop loss after stop loss, right? So this is gonna be something we cut through. Okay, and so yes, that's a viable reason, but other than that, you can't just say, oh, there's buy side above. You need to have a condition telling me that there's buy side above. You can't just say, oh, there's buy side above here because it just looks like the market wants to go here. That's not a good answer. There has to be a reason. Okay? So really the first reason was we violated a bearish fair value gap, right? Which I was not expecting to work in the first place because we bounced off this. Now that doesn't mean by the way, that doesn't mean okay, I'm not looking for shorts out of this, because if we did get a short out of this, I totally would have taken it. We just never got any. Okay, but really I knew the weekly draw was higher. I didn't know whether we go like maybe we could reject a little bit, get like one more retracement down, right? In live time, this is still a place where okay, look for shorts here if we get them. If not, it's not a big deal, right? You're not even expecting us to short there anyways, but maybe you could at least short down another 20 points and then get another run up, but that's another story. Okay, so really the reason here is one, we violate this bearish PD array. And then the second reason, okay, is we bounce off this BPR, right? We bounce off this BPR, okay, in my draw on liquidity video, in my draw on liquidity thread, okay, all those stuff, where do I say the market has to go after we bounce off a fair value gap with a lot of momentum, right? I would consider this a lot of momentum. I'd consider this a lot of displacement. I'd say after we bounce off a fair value gap, the market has to go hit the next high. Okay, that's how the market works. We have to bounce the next high. Okay, for you guys who are trying to do the new trend on Twitter, the turtle soup entries, right? I know those. I'm not really big into them because you really have to know what you're doing. But again, turtle soup entry, right? As soon as we take out a low, right, the market is going to want to target the next high one way or another. It doesn't matter what's in between. It doesn't matter if there's bearish fair value gaps in between. The market will go target the next high. So it's like, okay, if you turtle soup this entry, right, the market really does not care about this bearish fair value gap, and it's easy to say that in hindsight, although in live time I would have said, okay, if we get a short setup, which I think I did say anyways in live stream, if we did get a short here, right, and look for a short, do not blindly short, but maybe if we get like a scalp here, I think I said if we did get a short setup here, I said don't hold long. I said that all day on Thursday when this was happening. I said if we did get a short, don't hold long. My premium members can speak for that. I said it in next time trade, I think. I said just don't hold long if we get a short. But like, again, turtle soup entry, right? We take out this low. This is just inducement. It's called inducement of the entire time frame. Your target's always going to be the next high, okay? So that's how the market works. The market is targeting a liquidity pool after liquidity pool. Okay, it likes to rebalance fair value gaps. It likes to hit order blocks for entries, but the ultimate target is going to be liquidity pool to liquidity pool to liquidity pool to liquidity pool. Okay, that's the main point of the market, right? You have to create stops. So because we violated this bearish PD array, right? We bounce off this BPR. I know it's going to be targeting next liquidity pool, which is this high right here, which we've not even hit this high yet. I just want you to note that we have not hit this high yet. Okay, this is kind of my target going to this week. Okay, and I'll explain why. And just this is what you should understand. This is the logic that you should be coming to the market with, right? This logic is how you're gonna win. Okay, target this high after we take out this low. Okay, it's just the logic you need in any time frame. All time frames are fractal. Okay, that logic's gonna work for you in every single time frame. Okay, so that's the reason why I would say, okay, next candle is going to expand up. Okay, now we're pretending this is the 1 minute chart, right? Okay, well, this is not the 1 minute chart, as we know. This is the daily chart. But if this is the 1 minute chart, I'd expect, okay, next 1 minute candle to go take out this high. And this is how you determine it's a trend day, right? If you see a setup where, okay, we're in the, let's say this, same example this week, right? If you see a setup where, okay, we have a weekly green, bullish green candle off this fair value gap, right? And you're expecting the next candle to be up. Well, this week I'm expecting a trend week up, not a trend day up, but a trend week up, because I see we bounce off this bullish fair value gap, right? We have a giant hammer candle going up here, right? And obviously psychologically this shows, oh, buyers are strong, which makes me second guess this because all Twitter is thinking we go up this week, that would be fun if we don't, but that's obviously my bias at the moment. And it's just, okay, if this was a 1 minute chart, I'd expect the next candle to be green. But we have to look this from the perspective of a weekly. Okay, same thing on the daily. Next 1 minute candle, I see, okay, we violated this fair value gap. I'd expect the next 1 minute candle to be green. Okay, if you can find and plot that setup on the daily where, okay, I expect the next candle to be green, well then you know it's going to be a trend day. Okay, so I'm just going to go back a little bit. Okay, and we're going to kind of do a little experiment. Okay, so the conditions I must see are, let's go back here. So the conditions I must see for me to kind of predict the next candle is, one, either we took sell side or buy side and we have nice momentum up, or two, we bounce off a fair value gap. So if I just kind of replay this, okay, let's do this 1 times. Okay, right here, example right here. Actually, I'll just replay this a little more. I gotta get into this first. Okay, all right, right here, right. What do I see? I see here we violated this bullish fair value gap, right? So that's what I see. I see this is literally simply what I would think in live time. Okay, I see, okay, we violated this fair value gap in the daily. Okay, we created a couple volume imbalances up here, right? We created volume balance here. Okay, and I would say, okay, we broke this low with a lot of displacement. Okay, so this is interesting to me because he broke this low with a lot of displacement. again, you can measure displacement by doing something like this, right? If you do, if you draw a box from this low to this high, or yeah, I would say this high. And no, I'd say this high actually, because this is the lower high before the move down. Okay, this low to this high, right? If the displacement below is low, if we move the box, the start of it to this low, if the displacement is more than 50% of this box, which you can see it is, I consider that strong displacement. So the first thing I notice here is, okay, we've strong displacement down. And this is the daily time frame. So pretend like this is the 1 minute, okay? Right here, where do I expect the next candle to go? I'm not sure, okay? I want to see maybe a higher retrace into premium, right? I'm really not sure, okay? Right here, I'm not sure where the next candle is going to expand to. Okay, right here, this is the perfect example. Okay, what do you notice right here? We have a BPR. Okay, we have a BPR, and this is a great example. I'll just go back to here. Okay, right here. We took this low inside this fair value gap, right? So this is the daily chart. Pretend this is a 1 minute chart, okay? This candle, I'd expect this next candle, if this was live time, I'd expect this next candle to be green here, okay? This is where I'd start, okay, I'd be like, the rule is, generally, there's usually one trend day a week, okay? Once out of 7 days, there's usually one trend day, okay? It doesn't happen every week, but generally, if you backtest, there's usually one general trend day in, I would say, probably a 10-day period. I would say in the next 10 days there will be at least one trend day. Okay, that's usually like my general rule. So like right here, this is where I'd start to look for the conditions to create a trend day. Okay, and this is where it gets a little more in depth. Okay, what are the conditions to trade a trend day? The first condition is I have to come into the market, I have to see some sort of bullish PD rate respected on either the hourly, 4 hour, daily. And generally, this is the daily fair value gap. So what I teach people is I say, okay, I see we're holding this daily fair value gap. This is where I'd start to look for a trend day to this high. Okay, why this high? Can someone tell me why this high? Type in comments, please. Exactly. Parsifal got it right. It's a intermediate term high because it's an intermediate term high inside this fair value gap. It's the highest high formed inside this fair value gap. So if you don't already, these are very, very good highs to target and take profits at, because these intermediate term highs at these fair value gaps, they're just really good liquidity pools. Okay, they're really good with liquidity pools because you get a lot of people shorting inside this fair value gap when we do reject here. So not only is there stops from the fair value gap, but there's stops from people shorting this fair value gap. Okay, it's a really good high. Okay, so this high, yes, liquidity, looking for liquidity after the fair value gap. Exactly, Chris. Okay, this high right here here's where I'd expect. Okay, I'm looking for now conditions, which we already have the condition here in the daily time frame. We already have the condition to be bullish here. Like, we already have the conditions to, okay, look for a trend day here. And because we already rebalanced this fair value gap, right, I'd probably at least target this volume imbalance. Okay, that'd really be my target for the ultimate trend day. But now I know, okay, we're in this daily fair value gap, this BPR, right? We took out this low. Here's a daily condition to where, okay, if this was the 1 minute, I'd be looking for a green candle. But we know this is a daily, right? So I'm still looking for a green candle on the daily, which means if we get just a solid green candle, it should be a trend day. Okay, now this is Monday. Okay, this is Monday. Okay, so Monday, if we go to the 15-minute time frame, this is where I start to look for conditions to, out of this daily fair value gap, for us to be a trend day. Okay, would you guys say you see any conditions here for us to be a trend day up yet? Okay, any conditions? No or yes? No. Okay, Rick's, good job. Okay, there's no conditions here yet for this to be a trend day up, okay? I know you this high. It's also equal highs in the 15-minute. But there's no market structure shift up. There's nothing telling me, okay, we're going to go up. And this volume is a little low because this is when the contracts were switched over. So yeah. Okay, so I see no condition here for us telling me we're gonna have a trend day up yet. Okay, so should have probably went on the ES contracts for this. It's fine. Okay. So my condition for us to think, okay, this could be a trend day up, is I need to see a giant like hourly fair value gap coming out of this fair value gap. Okay. Okay, I really don't see that yet. I literally forget what happens here, so I'll kind of, this is gonna be like live time as if I was looking live time. This is where I look for like an hourly fair value gap, like okay, and then Q, right here, this fair value gap. So the live example was from a couple days ago where, okay, we had this daily fair value gap. Right now, that doesn't mean I'm expecting a trend day up. That means go to the hourly and see if you get another like giant hourly fair value gap, right, which is right here. This is what you're looking for to be like, okay, we have an hourly fair value gap right here, off a daily fair value gap. This is what you're looking for to be like, okay, if we can get a giant up move on this, I know the daily has just, I know we're in the weekly fair value gap. I know the daily has resting liquidity above. So same kind of example here, right? So right here, it's the same example where I'm looking for just a giant fair value gap or a giant break in some kind of PD array, and then I'll kind of determine, okay, we should just go up from here. Okay, nothing really telling me yet, right? I'll mark the high. So right now, I would say this is important to me. So just keep in mind, this is generally a daily fair value gap. Right now, if I was on live time, I would be marking this. Why would I be marking this? Because this is the last bearish PD array, and we have an intermediate term high. So if this was broken by displacement, that's when I would expect, okay, I know we're in a daily fair value gap. This is when I'm looking for the trend day up. Okay. Okay. All right. There it is. So right here. Okay, why do I like this fair value gap? Well, you can see we break this high displacement. We break this bearish fair value gap. This is my first day where, okay, this is on a Thursday versus Monday, Tuesday, Wednesday. We never really got a trend day up, right? So this right here, okay, this is where some days the trend is going to be up, some days it's not, okay? Knowing that we just bounced off a daily fair value gap and knowing we just, okay, we broke this intermediate term high. The condition would be, okay, as long as we hold this fair value gap, right, I should be expecting higher prices this whole time up, right? Until we hit this high, I should expect this higher prices this whole time up. And really because of, okay, if you look at the daily, really because the daily too, right? The daily, we just have a nice reaction candle to this, right? If this was the 1 minute time frame, ideally, like I'd just be expecting a candle up to this high. Okay, so we have a nice hammered candle. I'd be expecting a retracement to this high. Right, and because this was a, yes, I am posting this, DZ. And because this is like the daily and not the 1 minute, I'd still expect the same thing off a daily, just like I would expect off a 1 minute, right? If I was long on the 1 minute here, I just expect the next green candle, the next couple of green candles to go up here. Okay, so knowing that information, right, on the 1 hourly, I know, okay, this is a nice 1 hour fair value gap. We have a market structure shift. This is a fair value gap where, okay, as long as we hold it, right, we don't need to go in it. As long as we hold it, I know we're just going to keep going up and up and up as long as every bearish bullish PD is being respected. Okay? And I didn't, like I said, I really forgot what happened here. I didn't know if we were tracing this or not. I know we went up at some point. But using kind of the daily chart, right, if this was a 1 minute, I'd expect their expansion candle here. I'd expect an expansion candle here. I'd expect a expansion candle here. And I'd expect one here. But we don't get it until this Thursday. Okay, but you kind of see when, even though I expected an expansion candle here and here and here, the whole time in the hourly time frame, right, we never got anything telling me that we were going to have an expansion candle up on the daily, right? We never really broke above any highs right here, right? We got a failed swing high here, which tells me what, we're setting up for a nice liquidity run at some point. You don't know when, but we never really got anything here where it's like, okay, there's no break of bullish structure. Really, the only thing, it was this high right here, this high, right? And even this high, you could argue that, okay, now we broke above this bearish fair value gap, right? we were expecting all the bearish PD rays here. We never got anything indicating, okay, this is going to be a trend day. Even though on the daily, this was in the condition for, okay, I'm expecting a giant candle, you have to really go down to the hourly or go down to the 15-minute and kind of say, okay, now we know we're in the condition for trending the daily. Now we have to get the condition right for the hourly chart for to be a trend day, which this is it, right? We break this high with a lot of displacement. We have a bullish fair value gap, right? So your condition should be, okay, I'm expecting upside all day to this high as long as this holds. And because in the daily we kind of have these volume imbalances, right? And you can kind of see like right here, I know what's going to happen obviously, but it's kind of the same thing that happened on same thing that happened on Friday. Okay, if you look at this 4 hour, we knew this was a daily fair value gap, but you kind of see us blow by it, and it was hard to see this in live time, and it was hard to see this live time in the daily. You would only see it in the 1 hour. Okay, ready? This is the daily fair value gap. What do you notice? We just completely forget about it. We just obliterate through it. What does that tell me? That tells me, okay, it's definitely be a trend day up to this buy side, right? That's just telling me, okay, this daily fair value gap obviously does not want to be used as resistance, right? When you see a bunch of these big, giant, strong institutional candles cutting through like a daily fair value gap, we don't need it to be over them. Just this giant, you can just tell without even having volume turned on. Just this is a ton of volume, this is a ton of volume, this is a ton of volume, right? You don't need to have to tell, but if you see that in a daily fair value gap, right, and you know it, the rest of that daily fair value gap is probably going to get violated, which tells you what? Which tells you we should keep going up, okay? And in this situation here, coming into this next day where, okay, on the daily chart, right, if this is the 1 minute, I'd expect this candle to be green. Right, when you're coming into this next day, you kind of are like, okay, we already broke this bearish fair value gap, which I saw us breaking a lot of time yesterday. Okay, this candle it's just like a 1 minute, right? You're expecting it to be green. I'm expecting a classic buy day here. I think I DM'd Romeo about this. Romeo, we were both DMing and we both agreed last Friday would be another classic buy day, just because. Again, why would I expect a red candle, or why would I expect a choppy candle after we just obliterated through a daily fair value gap, after we just went through a lot of momentum, and after if we bounce off a daily fair value gap, right? I wouldn't have really expected a consolidation candle here because we just violated this with such velocity and pace, which is another important thing to look for, right? If you see us breaking something with velocity, speed, right, then you should keep expecting us to go that direction until we hit some sort of major high or until we hit some sort of major low. So again, I wasn't really expecting this candle to be a weak candle. I was expecting this to be classic buy day, because if this is a 1 minute time frame, I expected this candle to be green, right? Why would I expect this candle to be a red candle, right? There's no reason to expect this candle to be red, right? And this condition here, by the way, for you guys who were kind of interested in the conditions, this bearish fair value gap is a condition, right? As long as we hold this, I'm expecting us to go up. Okay, so right here, same kind of idea. I see us kind of, if we play this a little bit, right, I kind of see us where we kind of just have a bunch of green candles, right? Like right here, we're respecting every single bullish PD ray. Okay, this is something to note throughout the day. If you notice us respecting and just we're never going below any bullish PD rays, then you know it's going to be a trend day until one of those are broken. Okay, and the 15-minute is a really good indication of this, right? We got a 15-minute fair value gap, 15-minute order blocks, right? Obviously, I'm not going to have these drawn throughout the day. Okay, 15-minute order blocks here, 15-minute order block here. Until we really break one of these, it should be a trend day until we break one of these. And this is some days we trend day until like 2 o'clock, and then finally one of these gets broken, and then we just go down the rest of the day. Okay, and again, you have to be noting, if you think it's going to be a trend day, you can't just know it's going to be a trend day from the beginning. You still have to watch price and make sure we're respecting these PD rays. So let's say you get an entry here, right? You should still be holding until this high unless one of these are broken. So really, if you get in here, right, you can see if you get into this fair value gap rates and discount, okay, you should expect every single bullish PD ray to hold, and as long as those holds, those are all your conditions, right? this is a condition that if this holds, we're going to keep going higher. Same thing with this. If this holds, we're going to go higher and hit the next high. Okay. By the way, you can't just say, oh, we're just going to go higher, because how much higher? You have to answer how much higher, right? It's mostly to the next high. That's the target, right? So if we hold this, we should hit this next high. Same idea with this candle. We come down at this fair value gap. We should hit this next high again. Same thing with this order block, right? We held this order block. Where should we now go? This next high, right? So as long as those are holding, you know it's going to be a trend day. And I think it's better to kind of pay attention to the 15-minute chart instead of the 5-minute chart for stuff like this, because the 15-minute, the order blocks are a lot more solid. But again, you should be, if you see us trending up, mark these order blocks, mark these fair value gaps, and really what you should do is, okay, you see continuation up, you see all these fair value gaps, all these order blocks getting respected. Ideally, you should see us push to this next high. Okay, but you don't know it's going to hit this next high. You just know it's going to hit this high as long as these bullish PD rays hold, right? So if you want to chase an entry, okay, you know the trend is up. You have to enter. You should wait till one of these order blocks, right? You should wait till a fair value gap, which, okay, it gives us an opportunity here, which I'm not going to go to the lower time frame right now, but I always say, okay, we're on the 15-minute time frame. Look for like a 1-minute or 3-minute entry or something like that, right? So let's theoretically say there's probably a 1-minute entry down here. Okay, you know this is a 15-minute fair value gap. You know we're going to hit this high as long as we hold it. This is one to look for like a 1-minute entry. So you look for a 1-minute entry here, look for a 1-minute entry here, you look for a 1-minute entry here, which you would never really gotten, but you kind of see we would have gotten them down here. But this is an entry where it's a trend day. You're not going to get it, and that's okay. You're not going to get this trend day entry. You should have already been in. Okay, right here, right, you kind of see us go over this buy side, but even though we went over this buy side, you know it's still going to be a trend day as long as this condition of, okay, mark every single bullish fair value gap you see. As long as they're getting held, you know it's going to continue to be a trend day as long as they hold. So there's nothing wrong with longing this. There's nothing wrong. Like, I wouldn't obviously long this in the 15-minute, right? I'm not going to blindly long this. If we get like a smaller time frame setup right here, I'd still probably try a long here because, okay, the nature of the day, I know we've been respecting these bearish PD arrays all day. I know we have a daily volume and balance above. Okay, that's when I'd really be like, okay, I'm actually going to try and maybe enter after hitting buy side because, again, we're already into the afternoon. We have not gone down all day yet, right? The classic ICT buy day should have us going up until about 3:30, 3:45, and then we get usually that knife. Sometimes it closes, but 3:30, 3:45 is the general time. Okay, and that's when you can kind of say, okay, as long as this condition gets held, we should still keep going up. Okay, and then here you can see we just go up all the way till 4 o'clock, and then we end up hitting the volume balance the next day. But the key thing to take away from this is really the daily chart's going to tell you a lot. Okay, you have to be treating the daily chart just like a 1-minute chart, right? If this was a 1-minute chart and I saw a candle here with low resistance liquidity, I'd expect a nice big green breakout candle, right? You have to put this in your eyes of, okay, this is a 1-minute chart, this makes sense, right? But we know this is the daily, so it takes a little longer to play out, but it still should act just like the 1-minute does. And the other thing is just you're not going to be able to guess the trend day before it happens. You're going to have to see conditions to allow it to be a trend day, just like how I explained in the 1 hour. So I know we this low resistance liquidity, but until we have this kind of condition to where, okay, now I'm seeing a ton of buying going into the strong institutional candle, breaking this old high. Now the conditions are set for, okay, now I think it's going to be a trend day up. Okay, but until you kind of get that on the lower time frame, you're going to kind of guess, okay, this is the area we might get a trend day from, but you're not going to know until you kind of go down to the hourly, and maybe that morning you come in the market and you see, oh, we got a bullish SMT here, nice hourly green fair value gap here. We should just keep trending up all day, okay? That's really the main thing. And same thing with kind of NQ, right? Same situation we've had. I told someone, I said, as long as this hold, I'm just bullish, right? I'm not bearish unless we break under this. And I saw, okay, we have a lot of low resistance liquidity setting up right here. And this is just another situation where, okay, look for a hourly shift, right? So, and here my hourly shift would be this candle right here. Can anyone tell me why I would think, okay, we should be bullish after this candle here? Yeah, so we blasted through the bearish PD array, which was one, and then what's the other one? Yes, exactly, sequence. We stop punt inside this fair value gap, which I was not anticipating. If we get it, great, but I don't anticipate us to stop punt in a fair value gap every time. Right? I was still looking for the conditions for this to be a trend day before we actually did this. Like, I was still looking. This is just a good example. If I go back to here, right? Right here. This is enough momentum where, okay, if we just zoom out a little bit, ready? What do you see here? We break through this bearish fair value gap. These are the correct conditions to, okay, look for a trend day here. Okay, if I go to the 15 minute, ready? This is the fair value gap that told me, okay, I know it's going to be a trend day if we hold this fair value gap. Okay, that's kind of what I'm looking at. I know it's going to be a trend day if we hold this fair value gap. Okay, what do you notice? We never hold it. Okay, we never even get a single long setup out of it. Okay, so this is where I'm looking. Okay, do you guys see any long setup out of this? I know I don't, right? There's no market structure shift. There's nothing here to telling me, okay, we're going to go up all day. But this is really the condition to where, okay, we bounce out this higher time frame fair value gap. Here's where a condition would, if as long as this remains true, we should just grind up all day, because I know in the higher time frame we're holding this, right? But this is just one of those things where, okay, we never get along. There's just nothing to long off of, right? I say go to the lower time frame. There's never a 5 minute setup. There's never a 3 minute setup. There's probably not a 1 minute setup either, because we never broken these highs. But this is one of those conditions to where, okay, look for a trend day off of this one, but this one did not work, right? But you wouldn't have logged it anyways because there was no long setup out of it, okay? Same thing here, right? This bearish, this candle right here, immediately I'm like, okay, same kind of situation here where we get a nice move out of a daily fair value or an hourly fair value gap. We have a nice fair value gap here, but this one doesn't work. Okay, same thing here where, okay, we get another big, beautiful move after taking sell side, which I was not anticipating, but it's still good. We have another big move. We have a bearish or bullish fair value gap to support that. As long as this holds, I'm just expecting a grind up, okay? And that's when this holds, every single time we go up, I will mark every bullish PD array C. Right? So you see us bounce from it, and now my condition, as long as this holds, I'm bullish, and I should expect a trend day. Right? This is my first bullish one I draw. Right? We should keep going up as long as this holds. We should keep going up as long as this holds. And if you're in, you kind of just move your stop to each one. Right? So you can see we can bounce up that, right? This fair value gap, bullish. This one, this is important, so this is a little tricky. But this one, as long as this holds, you expect upside. As long as this order block holds, you expect upside. As long as this order block holds, you expect upside. This one, I would really say, okay, as long as this holds, I expect upside. But this is a little more advanced. This is a more advanced thing. Obviously, this was the open of the market, right? And what do we usually get at the open of the market? We usually get some sort of Judah swing, right? So this is the 8:30 time. This is the 8:50 macro time, and we just get the Judah swing down, unfortunately. So if you did get it in London and you put your stop below this fair value gap, right, you probably would have been stopped. But now, same kind of thing. You know we're going inside market hours, okay? Now you just mark every single bullish PD array, right? So like this, as long as this holds, we should just keep going up. And you're just going to keep moving your stop under every single bullish PD array, knowing that, okay, as long as we hold them, we should keep grinding towards the high on the daily. And there's sometimes I don't know where, okay, I see us going up. I see we hit this high, but I'm like, well, why are we going up? Like, why are we displacing through this high with such displacement? And that's when I really have to remind myself, okay, maybe check the 4 hourly. See if there's like an hourly's 4 hour target. And sure enough, I did on Thursday. I'm like, okay, I see we went through this high with a lot of displacement. I see this looks like low resistance liquidity. I now changed my mind. I was like, okay, maybe the target's here. And I did that on Friday where, okay, I saw I'm not sure where. I think it was like right here. I was like, okay, maybe now look for a short setup. And then literally 15 minutes later, I posted an index onto it. I'm like, wait a minute, never mind. I rechecked the 4 hour, I rechecked the daily. I think this is going to be a trend day up, and I never said I think it's going to be a trend day. I just said I think we're going to draw towards, I think I posted this high on, I said this high, or maybe it was this high, I'm not sure. I said, never mind, don't look for a short, low resistance liquidity, we're slicing through it, I think we're just going to keep going up. And I kind of changed my mind in like a 15-minute time frame because I kind of forgot about the higher time frame, and I was like, well, on the 15-minute I was seeing we were kind of going through this higher with a lot of displacement. And what does that tell me? That probably means we're going higher, right? And we're still respecting this bullish PD rate. So you kind of can change your mind sometimes and be like, well, I'm not really looking for a short setup yet because I do see us going through this high with a lot of displacement. There's probably some high I'm missing on the higher time frame that I just am not seeing at the time, right? So that was kind of what my thought was Friday and kind of why I switched my bias quickly. And you can see right here what happened was, right, by the way, we are bouncing out this nicely. Again, as long as this holds, right, I'm expecting this is just a live example. As long as this holds, where am I expecting to get hit? I'm expecting this high to be hit, right? This is the high I'm bullish towards. Okay, this is just another example where, okay, I see we're trending up. I'm bullish as long as this holds, right? And fair value on ES, it's a little messier. Let me just check ES real quick. Okay, it's a little messier in ES, but it's still kind of like an order block, right? Still this 15-minute order block, okay, which I'm drawing. You don't see me drawing the whole candle. Obviously, I could. It's just a lot of candle to draw. But the open, right, you can see we bounce out the open. So really, it's like, okay, I'm still bullish. I'm not bearish yet. Like, there's no reason to short here because we're still holding this 15-minute fair value gap, right? We're getting quite decent displacement here as well. And we cut through this bearish fair value gap with a lot of momentum, right? So as long as this holds, it's like, okay, I'm still expecting this to go up here. I don't see any short. I know there's a daily, untapped daily high above, which is right here, right? See how close we're getting to this, and we just, again, this is where you'd expect this to hit. But yeah, that's kind of a deeper explanation of kind of where you got to look for a trend day. The conditions have to be set up right on Friday. The conditions were set up so well, right? At 2 a.m., we get this giant red candle in London, creating order block. And when you see something like this and you know, okay, we just expanded the previous day, this is the 1 minute time frame, I just expect us to have green candles after this. We created this order block overnight in the London session. Again, in hindsight, you don't know this is going to be order block until right here. Okay, and once you see, okay, we get a red candle here, kind of a green candle engulfing over it out of a bullish fair value gap, that's when you kind of expect, okay, we should expand here now, because before every order block we get expansion, right? So this kind of told me, this was another reason why I kind of knew. This was another thing that, okay, we formed this order block inside this bullish fair value gap. I should be expecting expansion here. And that's something I've been trying to do lately. I've been trying to predict order blocks, because if you can predict order blocks, you know when expansion is going to be coming. But that's a lesson for another day. But same kind of idea there. And just the 4 hour set up beautifully on Thursday or on Friday. Right, my condition was actually this fair value gap. So I said, as long as this held, right, I'm still looking for long setups. I was not short biased at all that day. I did not mention. All I said was, okay, if we get a short setup, do not hold it that long, because I knew people were going to try to short, which I was saying we probably shouldn't short. I kept marking bias at above. I never marked sell side once all day. I think at the end of the day there were some equal lows on NAS, which we never actually got the setup to get towards, but I kind of said mark them just in case we like swept them and then get another long setup, which never happened, unfortunately. But that was really the only instance. But yeah, so just the conditions on the higher time frame going to the day are very important, right? If you see like a bullish SMT off open, if you see us respecting some bullish for red gap off open, then it's really, you should be expecting a trend day, as long as we just keep holding the bullish PD raise, right? So like even right here, if I came to the market this day and I saw, okay, this is a bullish SMT, I'm expecting a trend day, but it's not like I'm gonna be out. Like, I'm gonna be targeting next highs, right? Which most obvious next highs here. It's not like I'm gonna hold the full position until, okay, if I'm thinking we get a trend day, maybe I'll hold some runners here, but I'm not gonna hold a full position past this high. I want to see the reaction to this high first, right? So like right here, you can see we get like this is a bullish SMT. I think this is actually bullish SMT. I don't think that's actually a fake SMT that I'm just trying to draw for an example. But right here, if I came in, I woke up and I said, okay, it's a bullish SMT here. I'm expecting a trend day until I see something that tells me otherwise. Okay, got the condition set up for it where we're breaking this kind of, breaking above this gap, right? We're breaking above. There's probably smaller bearish fair value gaps on the smaller time frame here. Okay, but it's really important to mark all the highs. Like, even though I was expecting this day to be a trend day, you should still be marking these highs, right? Because if it's not a trend day, we will go hit this high, then reverse. So it's really important to mark all the highs and kind of see, okay, are we getting a lot of displacement over them? If we are, we should keep going up. If we're just kind of wicking over them, that's when we could get a possible short setup. But right, you should be holding your runners until some sort of bullish PD rate gets broken, because honestly, in live time, right, you don't know if we're going to hit this buy, send, and reverse. But you know, as long as you respect the bullish PD rates, which is why your stop should be under them, just in case you're wrong. But like I said, this whole day, right, we got the giant green candle on the daily, right? So I was really expecting that the next candle be green, because again, it's just like a 1 minute time frame. If this was a 1 minute and I saw this type of candle, well, why would I expect the next candle to be red? It just doesn't make a lot of sense. If anything, I'd expect this candle to be red, at least to retrace to this fair value gap, then go back up again. But I'm not going to know this until we violate some big PD raise, right? So really until like some sort of bullish PD rate breaks and we get some violent move down, I'm not expecting this daily fair value gap to be retraced to. Although it would be nice to do this, right, because this would give us more opportunity. On the smaller time frame, nothing is saying that we want to go down yet. So this is why you have to do analysis on like the 15-minute or 5-minute as well, because nothing is saying we should go down yet until we really knife down and kind of see this act as resistance, right? I'm not really bearish here yet. So that's kind of my condition. And if we did, just kind of do a little analysis here. If we do kind of cut through this and do not hold this, which as long as you do, I'll look for longs off of it. Then my next target would probably be right here, because you can see that this is a lot of engineered liquidity. Okay, it doesn't have to be a perfect trend line, but it's a lot of engineered liquidity. All these lows in a row, and then you get these equal lows with a fair value gap underneath. So that would be my at least my target, because you got fair value gap that's unfilled, unbalanced, right? It's unbalanced. Everything else is balanced. We got a ton of engineered liquidity over it. So this would be like the next trade stop if we did end up kind of knifing through this, and then out of this, I'd maybe look for another potential long. So yeah, that's really the in-depth explanation of, okay, I kind of explained to you the conditions that should be present either from like the daily or 4 hour to get a trend day. Hopefully the example earlier of me kind of explaining, okay, I know we're in a daily fair value gap, right? And it was right this. I know we're in a daily fair value gap here, but you don't really know if it's going to be a trend day until you get the conditions and the smaller time frame to set up for it. So like right here, we never really got the conditions on the smaller time frame, did we? Like, it wasn't until really this candle where, okay, now we actually see the hourly breaking bearish PD raise. This is like the start of the condition. So that's really the big thing with it. And again, risk management's key, right? You should have, if it's not a trend day, right, you should have stops below fair value gaps that will support it's a trend day, right? And if you know we go under them, you'd probably know, okay, my bias is wrong, it's probably not going to be a trend day. So those are important too. As always, just risk management's number one, right? Rather than, okay, I'm just going to hold calls for the day because ICT said so or Dodgy said so or whatever, right? You should still be making sure that the bullish PD raise or bearish PD raise are all being respected, okay? Sometimes, like, we have these lunchtime stop runs where we kind of go up all day and then we just run major stops lower than expected, and then we end up by the afternoon, right? Where maybe this is the open, this is the lunchtime, and then we just end up at the high this afternoon. I would not really consider this a trend day, okay? I do not consider this a trend day. But that will happen sometimes, which it's really not a trend day. But That's another kind of example of a day. All right, so that's about it for me. Again, did you guys understand that explanation and how I kind of, okay, you have to kind of create your hourly conditions off the daily time frame, okay, and as long as they're setting up, you should see a trend day. Versus in the last, like 2 weeks ago when we were consolidating on the daily, we're kind of in between two fair value gaps. So you don't really see anything that, you don't really see momentum off of any type of one fair value gap, right? Like if I go to the ES chart on the daily, like you don't really see anything like all these. We're just kind of in between two fair value gaps. We're in between this unbalanced fair value gap, and we're in between this daily draw, right? I was saying this whole time, right? This is gonna be the draw on the daily because just the momentum and just the displacement we broke this high with, it's pretty obvious, right? We break this high with a lot of momentum. Where should the market target? The next obvious high, which is right here, which obviously I would actually target here before looking for a giant short setup, but this is just going to be important. So yeah, you kind of didn't see any trend days here just because we're in between two key spots. Wait till we hit a key spot and then wait till the reaction off of it, then look for your trend day. What's your bearish target 4-hour swing low? What do you mean? If we retrace lower, really it would be this fair value gap right here would be my target to be like, okay, start looking for longs. And then if we start to go by this, then obviously this low target, and then I'd expect something like this. Only if we don't hit this high. If we hit this high, then if we did hit this high, I would probably not even care about this fair value gap. I'd probably target this low and then maybe look for a bounce. Okay, us hitting this high tells me everything. How do you know when a fair value gap should stay unfilled? The fair value gaps that usually stay unfilled are ones that like, let's see. So, like right here, okay? One, it's just because the momentum right here, and we know the draw is higher, but the two is really, okay, on the higher time frame, this is a inverse fair value gap. So, ideally, like, you don't know this fair value gap, right? Like, if you can kind of visualize this, you don't know this fair value gap's going to stay unfilled, but you're kind of expecting, you kind of know that, let me just put this front, where this is an inverse fair value gap, so when we break above it, we want to see is use as support. And because of this magnitude we just broke above it, I'm not, like, I think AM Trades made a post about this. He wasn't really expecting a deep retracement here because just the daily candle just completely violated this. So that daily candle, we were expecting another green candle the day after. So like right here, this fair value gap on the hourly, I wouldn't really expect to get filled, mainly because it's this inverse fair value gap that tells me, okay, we broke through it. I want to see a retrace into here, but let's say this was the fair value gap, right? Let's say this is the fair value gap. Let's say there was a wick from this candle up to here, okay? Then I'd expect this on the hourly to remain unfilled because I know we're bullish as long as we hold the inverse fair value gap. So if this is an inverse fair value gap, right, this should remain unfilled because I should see us bounce off of this. Not go below it and bounce off this, but I should see us bounce off this. So really, like in that situation, this should stay unfilled. Or if there's like a breaker block, right? If there's a breaker, let's say, like, let's just say this is not a breaker, but let's just say it is, okay? Right? We get a breaker here. I should not expect the retracement to this fair value gap because this is a breaker. So I should expect us to bounce out the breaker, okay? That's the other example. Do you get that? And then there is another definition. It has to do if we closed with a lot of magnitude underswing low or overswing high or not. I don't really use that definition, but that's like really what I look for is, okay, breaker blocks and inverse fair value gaps that kind of stop us from going lower, right? So that's kind of my mindset. If there's a failed OB is also a breaker. Not quite, but I explain it like that. That's not really the true definition, but I explain a failed OB is a breaker, just so new students understand that. But that's not really the right definition. So yeah, inverse fair value gap. I kind of look for roadblocks in the way of lower fair value gaps, right? So like, this is a breaker, this would be a roadblock, and this would tell me, okay, we should kind of bounce off this, maybe not hit this. This is not a breaker because this is not a green candle right here. A normal break, like, this has to be a green candle for this to be a breaker right here. This candle right here. Okay, because this is the swing low. Rick's with the cap. Okay. Yeah, green candle for a bullish breaker, red candle for a bearish breaker. So this would not be a bullish breaker because this is not a green candle. Alright, is there any other questions? We've kind of hit the hour time limit, but if you guys have any questions, I'll answer them. This will be recorded, by the way. After FEG on the higher time frame has been wicked through, but then holds and closes inside last minute, if we're looking for a setup, would you wait till price moves above FEG high? Bullish scenario. Okay, I get what you're saying. So you're saying, like, this is important to note. You're saying something like, if I know this example from a couple weeks ago. Right. Jeez, I know, I don't know. I'm trying to find an example what you're talking about. I know what you're talking about. Okay, right here. So like right here. What he's talking about is, so what McGuire's talking about is, if you wick through this fair value gap but then close above it, would you wait until we move above, like, the high, like, right? Is that what you're getting at, right? Yeah, I would say until we really violate this and close below it, I'm not really bearish here, right? If I see this wick down here on the 2 a.m. time frame, but I know, like, the 1 hour and 4 hour is the best time frames to this because most people are going to be using that. Again, those are good time frames. If I know that the 1 hour and 4 hour, like, if I know the candle is wicking down below, but I know the candle's not closing yet, I'm not gonna chase short until the candle closes. If this candle closed under, maybe I'll chase short if I were to chase. Obviously, it's not a good chase setup in the first place. But until the candle really violates, which violating means lots of volume closing below, which you don't really need to look at volume to know there's a lot of volume, then I'm not really reversing my bias yet. I really wait for the candle close. And if I do see a giant wick below fair value gap and then we just violent wick back above inside of it and then we get a green candle, immediately when I see something like this and then this, I'm like, okay, we just heavily went below this fair value gap, never closed below it, and then we have a green candle coming back up. I know the draw is probably going to be the next high at this point in time. After I see this candle, I don't need to see any of these. I know the draw is probably going to be the next high because of how violent move this was back up and how we held the fair value gap. But you can just see, like, this is so algorithmic. Just the fact that we giant wick under, we held it, we never closed below, and then we had a green candle. This is the markets just being algorithmic, knowing that they're not going to let us close below it. How do you assess whether price looks like it's making a run on liquidity rather than just a liquidity sweep? Are you talking about? That's the same thing. Like you just said the same thing basically. Are you talking about a market structure shift versus liquidity sweep? Like how do you know if it's a liquidity sweep or how do you know if it's a market structure shift? I do have a video on Twitter on that. Taking external liquidity inversing versus continuation. Oh, yeah. Like I said before, it's the displacement through the highs, which on Friday I said when we got up here, I was like, start looking for a short setup. But then I kind of changed my mind. I was like, never mind. I see, like, because I saw so many energetic candles, like even through this, right? This is a setup where I would say, okay, after you hit this high, look for a short setup. But this is the 1 hour time frame. So it's like, okay, look for a short setup after you take out this high. And now, let's say I go to the 5 minute, I don't see a short setup. And then if I just see this candle, like a candle like this, displacing just with this and not really wicking through it and just going through a buy side with so much displacement, I know there's probably a higher buy side we're targeting. Like right, let's see, like really NQ2 is a good example. On NQ on Friday I said, okay, maybe after this hits, look for short setup. But when I see us go through this high and then I see this green candle right here, I'm like, okay, we're definitely not going to get a short. Now we're definitely going for this high, which on the smart time frame, there's never a short setup anyways. So it's really the displacement we go through these highs with. If I see us really not respecting this liquidity pool, which by not respecting the liquidity pool means we're not hitting a little liquidity pool and we're not consolidating. If we hit a liquidity pool and I start seeing consolidation, that means I'm starting to look for some sort of reversal. But if I don't see us consolidate in the smart time frame but a giant liquidity pool, then I think, okay, we're probably not going to reverse yet. We're probably just going to keep grinding up. And it's really the displacement going through this. So I know external liquidity is here, or I know external liquidity is here. I know internals here. But if I see us go above this and just not really respect it and not consolidate after we hit this, I know we're probably going to target the higher external liquidity. Do you get that? So consolidation after hitting a giant liquidity pool is a really good thing to look for, because that tells you that we're distributing, and that's when you maybe are going to get a reversal or some type. Again, if you don't see any consolidation in the liquidity pool, it means there's probably stops higher to be ran. Do you always wait for a market structure shift to enter? We won't always get one, but do you? Not necessarily. Sometimes if I see like a giant trend line forming and I think I buy sides above, I'll kind of chase and enter. I did that Friday. Market structure shift seems to be more rare these days, where we get a market structure shift in a textbook 2022 model. That's really why I emphasized, okay, find where liquidity is and look for liquidity, because I feel like we aren't even getting half market structure shift half the time anymore. Like the textbook setups ICTs kind of shows us. Would you consider a 1 minute displacement candle creating a bullish for a rally gap over a bearish for a gap? But good. Yeah, some more. Yeah, I know. I love this setup right now here, Eric. I love it. I again, if this was a New York kill zone, I'd probably long this right here and I'd sell right here. And again, my condition right now is as long as this order block holds on the 15 minute, right? I'm really longing this. My stop would probably be if we like kind of maybe went through the mean threshold of this order block. If we started violating this, I'd get out. But like if this is a kill zone, I'd definitely long this, and really this would be my target. I know we're really like obviously from like a risk management perspective, there's no way in hell I'd long this. But let's say this was waiting to discount, then yeah, maybe I try along here, you know? Like, obviously way too high to be long this, and it's just a really stupid move. But like, from an ICT standpoint, like this is the kind of setup you want to look for. And you can kind of see it's also bullish for backup as well, right? So this is really the condition, right? As long as we hold this, I'm bullish. I would say the 1 minute displacement candle creating a bullish for backup over a bearish for backup. That can be a good replacement. So like right here, I see, okay, maybe this isn't enough displacement over this high to be a market structure shift, but we also did violate this textbook fair value gap right here, so I consider this a market structure shift versus this really isn't enough displacement, but this candle violating this bearish fair value gap is enough displacement. Yeah, I'd probably take this setup right now if it was a kill zone. I'd definitely long this. Right, and we're still holding that 15-minute fair value gap. Wow, beautiful. Again, it's just multiple things. Right, so if I'm longing this, right, now we hit this high, right, I just put my stop at break even. Okay, and now really I'm targeting this high, right? This is my target. I'm curious, did anyone actually take that? I hope no one did. If you took that, nice, congratulations. Don't listen to me ever again. But basically, you did, Emilio? Nice. I knew someone took that. But yeah, this is a very textbook long. I definitely would have longed inside a kill zone. Maybe I could have longed it right now, maybe not, but maybe I could have went light size. But like right here, you can see bullish fair value gap. This is market structure shift. It's a 15-minute fair value gap or 15-minute order block. What I'd do is now that we hit the internal high, I'd put my stop at break even, and I'd take half off here, and I'd probably take off the other half when we get up to this gap, like gap fill, maybe. And then maybe I'd leave a couple runners for this high. I'm not really leaving a full position for this high because it's kind of far, but you kind of get the point. I could not time that more perfect. I've timed that perfectly, apparently. Thanks for playing. Alright, anything else? ITLs and STLs, again, that's a video where you're going to have to watch episode 12 a few times. I do not pay attention to, okay, this is short-term low, this is short-term high, blah, 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 blah. I don't mark that all on my chart. That's just market structure, and that's going to come with experience and time. That video is kind of confusing, too. How do you treat all those wicks that are right now on the chart and the volume and balance? All these? I probably not worry about them. I probably just leave my take profit up here because it looks like these are kind of just wicks that are creating a bunch of stop losses, maybe like a giant liquidity pool, right? Like a fake supply zone. So I'd probably expect these to be ran through. Obviously, I could say, oh, buy side's right here, but really buy side is going to be up here because there's going to be just a bunch of stops here, and this is the end of the gap. Emilio, how many points did you get off of this? Did you long like right at 13,310? By the way, this fair value gap, you can kind of see it's in the process of getting violated, right? This fair value gap right here, it's in the process of getting violated. And really, I'm bullish here, right? As long as this holds, you kind of see this getting violated. There's not a close above yet, but as soon as you get that close above, I know, okay, we've lowered resistance liquidity up here. I'm going to be expecting a run to this buy side up here, which really, you can see, like in this is how I do 3D analysis. ES looks a little cleaner here, I'm not going to lie, because in ES, you can kind of see like the gap is relatively small compared to NQ. So really, if I saw a nice green candle break over this, and I was in the NQ long from right here, I probably wouldn't sell my NQ position until we took out all this low resistance liquidity in ES. So I'm basically using ES for my target and NQ. I would not use an NQ target. I would just be like, okay, once ES hits this high, I'd probably get out of my NQ position. That's obviously a little more. That's a 3D analysis thing. I talk about that in my live trading a lot during the day, so don't worry about that for now. And now you can see these are equal highs, right? And equal highs on NQ are very rare. This is actually not bad volume. I'm not gonna lie. Like this is, we aren't getting really barcodey candles. Maybe you are on the 1 minute. I'd expect this to hold, right? I'm just gonna demo along this. Right. So if I was, here's a play I'd actually do, right? So if this is a kill zone, I'd just buy one here. This is where it's up to you. So I'd actually probably put my limit right here. Better risk reward. This is a discount, right? I see this equal highs above. I see we bounce off this 1 minute fair value gap here. And now I'm putting my limit in discount, like right under discount, right? And then my risk reward would be something like this. And then my stop would probably be the correct stop would be right here under the swing low, but I just put my stop like probably halfway through this wick, really, because I don't want to see this big of a fair value gap. I wouldn't want this to get violated. I mean, I could chase long right here, and I could move my risk reward and kind of skew it a little bit, but from a risk management perspective, this would probably be the better fill if I got it. Yeah, the CE of this wick would probably be my stop. Right, just because I know if this were to work, we would just quickly move out of this. We wouldn't even go down here. This is almost like I'm live trading for you guys. But, yeah. All right. You don't think this is a quality setup, AB? Why not? I think this, in a kill zone, this would be a quality setup for me. I'm not going to lie. This is just textbook long right here to these equal highs. Can you explain why, AB? This is really my model. Like, this is the model I'm the best at. Yeah, that's my reason. Like, this, if I did a model, this would be my model, right? We have equal highs above, bullish fair value gap off another bullish fair value gap. Just this is hitting every single time. I don't care. This is 100% win rate. This is like the model I mastered. Like I said, I could have chased here, but you know I don't really care. It's not that serious. And you can also see, what do you see on setting up on ES? You see a bunch of equal highs setting up here, which is a really good sign for us. We are Gucci for long. All right, so there's equal highs being broken, right? So us having those equal highs tells me what? That we're going to push higher. Okay, this is probably going to hit right here. Again, this is exactly like what I do in live trading. I think the fair value gap is too wide. Yeah, I could see that. Yeah, this is kind of wide. This is your guys' free trial of me live trading. I do not expect us to actually see a setup tonight, which this is a good setup for me. Gives no clear entry. I think that just a clear entry would be, okay, here's your entry right here in discount, and then your stop is below this low. Like, that's just, I don't know, it's textbook to me. Obviously, like I said, right, the entry is really, where was the entry really? The entry was at this order block, how I said before, right? This was the entry. Okay, really what I'm doing here is I'm already in from this, right? I'm already in from the 15-minute order block. Now I probably, as soon as you hit this high, I'm scaling half. Now my stop loss is just like right here, right? I'm leaving my trailing stop like right here, and I'm targeting this high. But I wasn't really expecting to take a, say, oh, this is a good setup. So obviously I didn't long this 15-minute LB, but I said this would be where I would long before. Okay, but anyways, all right. So that's it for the class. I'm gonna take this limit away. Obviously, this is just like an example. If this was a kill zone, I'd take this setup. We'll see what happens. But that was the class. So there, I would have gotten filled. Okay. So you can see if this plays out after. Again, I don't care if we do. I'll come back tomorrow morning and I'll see, okay, what was the structure overnight? Or do we have any bearish or bullish fair value gaps we're kind of respecting at the moment? And I'll kind of recess in the morning, okay? I'm not going to base what's happening right now off in the morning, right? This is just right now. We still have like 10 or more hours to go till the market opens. 12 more hours, I mean. So, all right, so that's it for right now. By the way, the premium, check the announcements if you want. The premium opens tonight at midnight. But yeah, I'll make sure to attend these classes every single Sunday. If you're a cheapskate and don't want to pay for anything, right? I do these free classes, and I also do one free live stream a week. So join those too. Okay. But other than that, see you premium members and voice chat tomorrow. Again, if you have any questions, let me know on Twitter. Tell your friends if they're trying to learn ICT. Tell them to hit me up. My DMs are always open. So yeah. Don't really have anything else to say, but appreciate you guys coming. Peace out.